Good evening, team. And tonight I am doing a special recording for you. Yesterday I've dropped a video talking about trend lines on the harmonic scanner, which included looking at impulse, corrective, and continuation moves of the market. Now, I know a lot of you really enjoyed that video and the way how I broke it down into you seeing the impulse move as a running man, the corrective move as a guy resting in the market after he's run up. So basically, an impulse move as a guy who would have ran, corrective as him resting in the market, or resting on the on the track, right? And then continuation as him then getting his energy together and running again. So let me repeat that again. So impulse move as a guy running. So think of somebody running a marathon, right? The corrective move is him taking a breath, catching his energy again before he continues the rest of the journey. So that's how we look at impulse. So impulse is a strong move in a direction, whether it might be a buy or sell. Corrective is just the market resting, and continuation is when we continue in the journey in the same direction as the impulse move. Now, I know that some of you wanted me to just show examples of how we would draw down the chart from a bigger time frame coming down to the 15-minute, where we would use the 15-minute to enter the time frame, to enter the trade, sorry. So we will use the 15-minute to enter the trade. And I know some of you were not sure how to, look for these patterns in the market. So the whole purpose of this video, because I usually drop a video every Monday. So the whole purpose of this video tonight is simply for those of you who are not sure how to drop the market, to drop the charts, look for patterns in the charts. And I'm just going to go through two quick examples of showing you how you would move from the monthly time frame all the way down to the 15-minute and plan to enter your trade, right? So this is pure value tonight. Again, get your pens and papers or books, because I will now be running through how you can draw the market up from the monthly chart and bring it all the way down to the 15-minute, which you'll be using to enter, right? So we're going to be looking for trends. We're going to be looking for patterns in common. And then we're going to be looking for impulse, corrective, and continuation moves. So if you like this video, remember to comment if it was useful, if it helped you in your knowledge, if it was valuable. Please comment below. Don't forget to comment and like the video, share it with your teams. And I know that this example video would help somebody out there catch a few bits. All right, so let's go over to the charts. I'm just going to share my screen now with you. Share screen. Right, so this is my trading view, and let me just close that. I'm not going to look at MACD right now. And this is Euro odd on the 1 month. So I'm just going to remove my drawings, and this is Euro odd, so Euro Australian dollar on the 1 month time frame. So now remember, you're starting from the 1 month. You're going to look for patterns in the market, right? And then you're going to scale it all the way down to the 15-minute time frame. So the first thing we want to identify here is that first we had a strong impulse move to the downside, right? And now overall, the market is just simply in a correction, right? So you can see where the market is in correction because we are moving in the opposite direction of the impulse move. So this, on a bigger scale, is the market resting before it goes again, right? So what we want to identify is a pattern of the correction, right? In this case. So we already know that this was a strong move to the downside. So the pattern we can see that we're going up into an uptrend. So that's the first thing. So you just want to make sure. I mean, guys, also remember, trading is simple. Try not to make it complicated. Some things are just, it is actually pretty much there. Don't try to search for the little stuff, the little patterns that you could see within the bigger picture. Right now, we're focusing on the bigger picture here, right? So as you see a pattern, you draw it into suit, right? As you see a pattern, you draw it into suit, right? So for me, so far, this is the pattern that I'm looking at, right? This is the pattern that I am looking at. So let me just, for those of you who don't know patterns, right? This is a bearish pennant, right? This pattern here is a bearish pennant, right? So you guys could actually go and research what a bearish pennant look like, and you will see that this pattern here is a bearish pennant, right? So now we're on a 1 month time frame. We're going to scale down to the weekly and look and see if we can find any patterns within the weekly, right? So far here we can see a pattern here forming as well. You can see the uptrend, and you realize that you can draw your pattern here as well. Now remember that 2 or more touches validate a trend line, right? So make sure you write that down. 2 or more touches validate a trend line. All right. So again, I'm making this really simple. Yes, you can draw different patterns that you may see on the left-hand side, but right now I'm focusing on the pattern that price is drawing so that I will know what my next move would be, right? But you can always, like for example, you can see that here, we have a pattern here as well, etc. But right now, as I say, we're focusing on what price is showing us, which is over on the side. So let's scale down now to the daily. That was the weekly time frame. Good. So on the daily, we can see, that we have an uptrend where price is touching this area and bouncing, right? And it comes back down close to this area, heads back up, and then actually comes and bounces from this area again, right? So now we really want to scale in to understand what is price telling us in terms of the direction that it intends to go, right? Now, for those of you who would research what a bearish pennant is, right? Usually after a bearish pennant, we're looking for a sell at the break of a structure, right? So at the break of that structure, we're looking for a continuation into the sell, right? So we need to scale. Right? So for me, this is where we could start to scale, right? So for me, that we've identified this as a downtrend, right? We've identified this as a downtrend. Now remember, you don't want to draw the trend lines through the body of the candles. You're using the widths of the candles only, right? So don't draw the trend lines through the body of the candles. Also remember that sometimes different persons might have different views. So you might be able to see also another pattern that you can draw, and that's fine, right? So long as we understand the bigger picture, right? So we need to understand the bigger picture. So again, here we could look at it that price is telling us, price is telling us that this is an area of rejection as well. Again, you can draw based on what patterns you see, but we just want to scale in to see what price is telling us. So we have an uptrend here as being respected, right? So this is the uptrend here as being respected. And this is on the 1 hour time frame. So a couple things, right? For those of you who know candlesticks, this is my first signal of rejection, right? This is my first signal of rejection. This is a bearish pin bar, as you can see, right? We got strong rejection there from this trend line, right? Now this is an impulse move. This is a correction. Now what happened right after the correction is that price broke under our trend line, which is an uptrend, right? So let's scale down to the 15-minute. So we had an uptrend here on the 15-minute time frame, right? So you saw that price tested here and bounced, tested and bounced, and now it came back, right? But look what it did, this toss. It actually broke our trend line, right? So this is what we mean by waiting for price to break the structure. You want to make sure that price gives you the confirmation of the direction it's going to go first before you start to assume that price is actually going to go into a sell or a buy, right? Because if there's no pattern, then do not trade. We're looking for patterns in the market, right? The market creates patterns all the time. You just need to find them, right? So in this case, this is an impulse move down to the downside. We broke this trend line. So what we will wait for in this case would be a corrective move, right? So basically the market resting, right? So we wait for the corrective move and then we can enter for the sell. And our target, we can look at moving from here down to this area, right? But obviously this is a big trade, right? So obviously to protect your profits, you would trail your stop loss. If you had to hold price for a long time to this downside, you will protect your profits by trailing your stop loss, so that just in case price had to reverse in between there, right, you would already be in profit. So this is just an example of how you can drop the chart scaling from the monthly all the way down to the 15-minute time frame, right? So I'm going to do one more example for those of you who are in my Telegram chat, and those of you that are following me on Instagram. I would have posted GBP JPY today for a buy. So right now we're gonna look at this buy setup. So we're going to draw these charts up, right? So we're gonna draw these charts. So for me right now, on a monthly scale, this correction pattern here is showing me an uptrend, right? So let's draw the trend lines based on what we see, right? So I'm gonna draw the trend lines based on what I see. So drawing a trend line based on what we see. So for me so far, this is an uptrend. We have two touches here on this trend line. So remember, a trend line is validated by two or more touches. So I'm gonna come down to the weekly time frame to see what price is doing. All right. So we had an impulse move, and then on the weekly, price is actually in correction, right? So right now, price is correcting, right? So right, so we had an impulse move, and basically the market is currently resting before it continues again. Now looking at this chart, right, this looks like a rising wedge, right? So this looks like a rising wedge to me. So you guys can look based on the the patterns that Akimoto sent out in the Telegram chat yesterday, and look and see what pattern this correction is, or this flag is. But to me, is a rising wedge. But even in this pattern, we have a pattern, because you can see this is a clear downtrend here, right? So we have a clear downtrend here at the moment, right? That's on the weekly. So now we scale to the daily time frame, right? So this is the daily, and you can now see the downtrend much clearer on the daily time frame. So you can see where price is being rejected, and it's obviously giving you lower lows and lower highs, right? So now we scale to the 4-hour time frame, right? So this is the 4-hour time frame, and this really shows you now how price is being respected throughout these trend lines. I am going to scale down to the 1 hour, and right, I'm going to scale down to the 1 hour here and start to look at what price is telling us, right? So based on this correction, based on this flag, right, this is a falling wedge. This is a falling wedge. So usually with a falling wedge, you then have a move to the upside, right? So let's come down to the 15-minute. So this is the 15-minute here, and you can see how price is actually being respected in this falling wedge. You can even draw it down even more, right? So I'm looking to see how price was respected here. Right. So we're just trying to identify the pattern. Right. So the pattern that I had earlier, because this price had moved, was this. Price was actually respecting here. This is the pattern that I actually moved, because I'm here looking at my chart on what I had earlier. So far, guys, if you look back at the Telegram chat, you will see that I actually had the trend line drawn here, and since then price has actually broken out of this trend line and already started to head to the upside, right? So if you guys caught this move, well, it broke here. So what we have here is we had the impulse that broke the trend line, and then after the impulse we had the correction, you can see here, right? And then we had the impulse again. So this trade already started to break towards the upside, right? I was just looking at my chart, telling myself I draw this up earlier today, and I can't remember it being so far up to the upside. And now I see price has already moved already, right? So as I say, for me, I expect long term that price is gonna come all the way back up. But however, this overall structure will need to be broken. So don't let us anticipate that. Let us allow price to show you that this structure is broken first. with the correction, and then we could enter for the upside. But so far, if you're in my trade that I sent out today, I would have sent this out when price was actually respecting this trend line. And I told you guys to wait for price to move off and actually break this structure and head towards the upside. So you would have had the impulse move. Again, let me explain what the impulse move is for some of you guys. This is where you have a strong move to the upside, right? So think of it as a guy running. So the guy is running, and then he takes a break, he rests for a bit, and then he continues to run some more, right? So that's the simplest way of explaining what impulse correction and continuation means, right? So again, if you guys had taken my trade that I sent out, I think it was only like 3-4 hours ago. Congrats on your winnings so far. And remember to trill your stop loss so that you can obviously have less risk involved, and you can pocket whatever you have so far, right? So this was just a very quick video. Let me stop sharing my screen now. As I said, guys, this was a quick video. I know it's quite late for some of us, and I'm quite tired as well, but I really thought that this video would be very useful for you guys that are learning to drop your charts, following Stevenson Linder, using the harmonic scanner, etc. It's really good for you guys to learn how to scale in and actually see what price is really telling you. We don't want to be anticipating so much where price is going. Because sometimes we might say, we might anticipate that price is going to go for a buy, and then price drops below and you are in a negative, right? So what we want to make sure is that price is going in the direction that we see it going, right? And the only way we will do that is waiting for the move to happen before we actually jump in. So we want to make sure that we are in when the move is continuing rather than anticipating where the move will start from, right? So we want to be in the continuation. So always wait for the impulse first, the correction, then you can enter the trade and ride it all the way up to the continuation. All right, guys. So thank you again for joining in with me tonight. I hope that this video was very useful for some of you, because I had a couple of requests where persons were asking me to actually show you guys how you can draw the trend lines and actually scale into the charts to understand where price is going. So I hope that this video was useful. Again, if you need to watch it 2, 3, 4 times to get it, sure. Guys, remember to come to our Thursday sessions. I will be drawing up the charts and working with you to make sure that you guys actually understand exactly what is happening in the markets. So thank you again for joining me. Coach K here, bringing to you Trend Lines. Take care, guys.